Jamie Ferris, a licensed independent insurance agent and risk manager, and president of PW Wood and Son Inc., which is agency that CCE works with. And then we also have Richard Andrews, owner and founder of Andrews Agency Inc., and he specializes in farm insurance. Both are located in the Ithaca region. It's a little far from us, but still know what they're doing. So I'll give you all the floor.
Okay, thank you. Thanks a lot, Taylor. Thanks for this opportunity. Thank you, everybody, for attending and participating in this. I hope you'll find the information that Rich and I provide here helpful. That's our intent. And our presentation is sort of in an outline form. We're going to go through and touch on various subjects, but we do want to engage in conversation over them. So please put your questions in the chat, and hopefully we will get to them at the end and go through them. We're looking forward to that presentation. So with that, I'm going to share my screen.
Hey, James. Again, a little, at least on my end, you're not very loud. That's all.
Okay, I'll try to speak up.
There you go. That's better.
So
Thank you.
better. Usually I get told I'm too loud, so that's one of the things that I love about.
I know this is the first time I've seen you this way.
Yeah,
you know,
I'm usually shy and reserved. Right?
Yes, you are. Yeah.
So, all right. So, ladies and gentlemen, again, thanks for attending. This is sort of a insurance and risk management for beginning farming. My background, and I'll let Rich talk. I'm an insurance and risk manager. I've been in the insurance industry, risk management industry for over 35 years. My agency is located in central New York in Ithaca, but I work directly with the Cornell Cooperative Extension for their insurance and risk management program. So we assist Cooperative Extension in its mission and how it carries it out throughout the entire state. Rich, do you want to introduce yourself?
Sure. Yeah, I'm Rich Andrews. I also in the Ithaca area. I've been in the insurance industry for a little over 33 years. As has been noted, Jamie and I we happen to operate in the same town. You may call us friendly competitors, but we're far more friends than competitors. My background, before I got into insurance, I grew up on a dairy farm in northern New York, Lewis County. So I've always had the interest in farming, and in fact, when I got into the insurance business, I frankly knew very little about it, but I knew a little bit about farming. So my natural market was to go out and talk to my local farmers. So I've maintained that interest. I've maintained that market segment. I'm currently engaged in small scale farming. We raise hay. We're transitioning from sheep into beef currently. Actually, I hired a neighbor to fit and seed 35 acres today. And I was, Jamie reached out to me and said, "Hey, we're gonna have this little talk. Would you like to contribute?" And I was happy to do so, because I'm glad that people are interested in entering and staying in farming.
Thanks, Rich. So let me move along here. Just a quick disclaimer. I always like to put this on here. We're going to touch on different topics. We tend to that go in the areas of possibly, we might mention things about legal issues or accounting. That's just the nature of insurance and risk management. We are not lawyers or accountants or HR professionals. We are insurance agents and risk managers, so we'd like to stick to where we're good at, but we do touch on these subjects. And as such, we want to make sure, let you know, it's just tangentially, and if you have a specific question related to those areas, you'll need to consult with an expert in that area, just so we know that. And we're also citing from general policy information. We're not speaking about any specific policy directly like that may affect you, but we want to make sure you understand that policy language can vary carrier to carrier. So we're just in general topics and covering that area. So our overall agenda today, this is what we're going to kind of go through, is liability insurance for farming, property insurance for farming, and how you do those areas, automobile insurance. We'll touch on workers' compensation, and then a few other areas of coverage to consider that may come up. And then, of course, we'll move into a Q&A. So first of all, what are we dealing with when insurance and farming? We're talking about risk. So the issue that you want to deal with is, what is risk, as it is involved in what we're talking about. So risk is any event or circumstance that presents the possibility of exposure to loss or danger to individuals, entity, or its employees, volunteers, customers, or the general public or property. So, and it's clear to make sure you understand that risks can come from an internal or external source. So how does risk impact you as an organization, as a farm? Well, it can affect you from financial loss. It can impact the people that work for you or other people that are related to the organization. It can impact your property. It can affect your operations on how you farm. And it obviously can impact your revenues.
So I would just chime in here for a second. As the discussion of risk, and particularly in how it affects or relates to farming. I took a risk management course 25 years or so ago, maybe a little bit more than that. And by chance, it was taught by Jamie's dad, who was a bastion of our industry at that time. And one of the things we talked about was risk management options. And Jamie, if I don't have these terms correct, please correct me, but I think they're close enough to be relevant. So you have basically 4 options to manage risk. And again, we'll use farming as our sort of touchstone here. There's avoidance, right? You can avoid the risk altogether. You can say farming is just, there's too much involved. There's too many ways to, get hurt financially or physically or whatever. I'm just not going to do it. So that's risk avoidance. There's risk acceptance. You say to yourself, well, all things bring risk. I'll just handle it the best way I can and see what happens. Maybe the next part of that is risk mitigation. That would be assessing what your risk is and doing everything that you can to lessen it. For example, you say, well, we're operating a beef farm here. We've got 40 head of Angus. They're pretty tough to handle some days. So, and it's going to be a problem if they get out and destroy the neighbor's yard or get out on the road. What we're going to do to mitigate that risk is to build some really good high tensile fence, keep a hot fencer, so on and so forth. So that's risk mitigation. And then the last one that I'm aware of or that I can remember is transference. And that's where we say, okay, we know we have risk. We've done what we can to lessen it. Now what we have to do is shift that risk off to someone else. Sometimes that's to form a separate legal entity to insulate your personal property or your personal assets from the risk generated by your farming business. What we're here to talk about, which factors into this, is insurance. You purchase a contract with insurance carrier that says, in the event that your risk mitigation efforts are unsuccessful for one reason or another, you have a tool to lean on to help you to avoid the financial disaster that might cause. So that's what we look at as insurance. It's not a necessity. It's not just a financial burden. It's a tool, right? So you have a problem or you have a job to do, you need a tool. And that's the way we like to present insurance. It's a way to get something done.
Excellent, Rich. You get a gold star. Did that really well. You remembered everything. My father would be proud of you. So yeah, and then the important thing is to make sure that people understand that it's so important. Other people want to make sure you have that tool when they want to do work with you to make sure you have insurance. And often people are always asking, well, where's your insurance? We need to see your insurance. So that's an important thing. The other thing I like to call insurance, not only a tool, the tool is it's a bag of money, right? It's a big bag of money that we don't necessarily have for ourselves. So we spend a small amount of money to somebody they'll present that big bag of money if we need it, and hopefully we don't. So let's moving on. Quickly, we want to touch on, since we're hitting insurance topics, key issues in insurance policy. So this is just sort of the basics of an insurance policy that everyone should understand and know. So first of all, one of the key important things of an insurance policy, who is the named insured? That is clearly on there and appropriately on there. So it should be clearly defined and encompass all owners, entities, and operating names. So as much as possible, as a farm, especially in farming operations, we'll see varying levels of structural organization. And they can be set up as individuals, farmers, it can be set up as LLCs, corporate farms. but it's important to make sure that all those that are associated with the farm and can be are listed as a named insured, so they in turn receive the protection of that policy, that they have access to that tool.
Let me just speak to that for a second, Jamie. The reason we put this in here, folks, is you know, I'm burdening you with my tool example. As this is a tool, if the tool isn't right for the job, it's not going to do the job, right? So if this policy is not set up properly, if it doesn't name the people that are at risk, or the entities that are at risk, those entities are not going to enjoy the coverage. And it would probably surprise you, maybe not, but it probably would surprise you to this day how many folks we run into, and they're not all in farming, but in any sort of business or real estate ownership, various things, that the named insured on the policy is not the entity at risk. In other words, I might have a meeting with Jamie, and he owns his insurance agency and he owns the building that it's in, and everything's fine and it's written into Jamie Ferris Insurance, blah blah blah. And I'll say, well, I assume then that you personally own this building, and he would say, well, no, I don't. It's in Ferris Insurance LLC. I want to separate that, and that entity is not represented on the policy. So happens all the time. That's why we want to bring that up. Make sure that and it's a good idea to, consult your attorney and set up your LLCs or set up your corporations or whatever it is. But just make sure when you do that, all parties are represented.
Excellent, Rich. Thanks. The other issues you want to make sure when you're looking at your insurance policy that you're paying attention to what is known as the terms and conditions. So those insurance policy is a contract, and thus it has language that is in it, and the terms and conditions spell out under which that policy is going to be activated. And it's always important to look at, you define what and how coverage is applied. Most definitions in policies are bolded. So if you see a term in a policy that's in bold, it means it's specifically defined somewhere in the policy. And you want to be sure that in that policy, so those terms and conditions respond appropriately, the operations are fully understood by the insurance carrier, that they're fully underwriting you, which is what they need to do to make sure that they are getting what they think is appropriate remuneration for their policy, but also to make sure that you're being covered. If you fail to disclose a certain area of your operation, or it's inadvertently left off, there's a chance it could be excluded, and you don't want to end up in that situation. So that brings you to the next section with the exclusions, which specifically tell you what's not covered. So they'll define coverage, but then they can take coverage back away under the exclusions, or refine what is excluded based on that policy. So they're defined throughout the policy. And the most important thing, one of the most important things also, is the limits of insurance. So you want what is covered by this policy. So for the various risks, what are we covering for property? What limits do we want for liability? We want to make sure those items are scheduled properly, are included properly for the appropriate amount, so that there's a recovery. Because what insurance is supposed to do at the end of the day is makes you whole to where you were before any incident that happened. And that's important to pay attention to those, to be looked at every year. They should be addressed every year, just refined and make sure it's appropriate. As you add equipment, you make sure you put equipment back onto the policy. As you take equipment off, you want to make sure you take it off. So those are key important issues with an insurance policy that you should be paying attention to.
And a lot of that can happen much more successfully, easier, if you have and maintain a relationship with your insurance agent or your insurance agency, right? If there's a back and forth, an ongoing conversation about what it is you're doing, what it is you wanted to accomplish with your insurance, what your risk tolerance is, whether or not you bought a new tractor or sold the old, those sorts of things. A lot of that will happen much more effectively if you can have a relationship with your insurance folks.
Absolutely.
He's here, hold on, I'll get him to.
So I just wanted to show, this is just a sample of a particular policy to understand. So these are the policy provisions, part of the terms and conditions. And I mentioned the idea of definitions. So this shows you where they define specific terms in the policy. And in particular on this one, on the farm policy, although it's a little small on some of the screen, maybe hopefully you can see it well. They actually have specific definitions for what farming is and what farming operations are and what the farm premises is considered. What do they consider farm animals? So it's important to make sure that those terms and conditions and definitions meet what you're doing. Is it appropriate? Is this policy covering what you're supposed to do? Do you need maybe an endorsement, which is how a policy is changed or modified? And does the carrier offer that to allow for what you may or may not be doing, so that you're getting maybe that definition enhanced or expanded upon if the carrier allows that? It's always important to make sure you understand appropriately that the terms and conditions meet and those definitions meet what you were doing.
And those definitions or those terms, the reason they're defined in this manner is they may not follow exactly common parlance, right? These are very specific uses of these terms, and that's why they're in bold, and that's why they're written down like this, so that everybody's playing on the same field when it comes to determining where coverage begins and ends.
Okay, so these are just some examples of liability. What are we concerned about? Liability, what does that mean? You know, and exposure, obviously, I'm sure most of you understand that concept, but just to be on the same what talking points that we're dealing with here. Obviously, if somebody gets hurt on your premises, if they get injured during your farming operation, something you're doing causes harm to someone else, a vehicle accident causing injury or damage to another party, liability from your animals, the animals get out, cause damage or injure other parties. You get into a contract with somebody to provide something, or you're in any kind of a business contract, you assume in those contracts, a lot of them assume some liability related to those contracts. So you want to make sure, how does the insurance respond to it and how is it handled? And of course, liability from your products you're selling, you know, from your farm that might be go out to retail to the grocery store or go out to your farm stand. You know, if somebody is injured from those products, what's the liability and how does our insurance respond, or how do we respond to that? So one of the first policies we're looking at, I'll turn this over. This is where one of the first tenets of risk management is understanding what risk tolerance you want to take, as Rich mentioned. One of the reasons Rich is on this call with me or helping is he writes a lot more farms than I do. He's much more familiar with this product than I am. So when I spoke to Taylor about it, I said, okay, I'm going to invite another agent to help with this because I risk managed my ability to comment on this, a lot of the insurance here, and said, you know, I can offer some insight, but somebody that deals with it on a daily basis and handles insurance. So I'm going to turn over a lot of this part of the conversation to Rich. So Rich.
So you can see the talking points here. Homeowners insurance is a standard insurance policy most individuals are covered for today. It is a bundled policy. It affords a wide range of coverages. It's the home, it's the personal property, it's the personal liability, it's you know, loss of use of your home. If there's a problem, it might cover the, you know, damage to your sewer line if you have it properly endorsed. It's just it's an amazing policy for a standard, you know, family living in a home situation. And what I've found in my years of doing this, again, now we're talking about the farm situation. Many farm operations, if not most today, many of them, as I guess in most businesses, they evolve, right? They don't just appear. Farm businesses evolve into what they are. And many people start out in farming as an area of interest, as, you know, a hobby, call it what you will. So when they begin, it's entirely appropriate and expected that they have a homeowner's policy, right? That's what you should have. As the farm interest, the hobby evolves, when it becomes maybe a revenue stream or it presents certain exposures, it very often evolves beyond the scope of the coverage that is designed and intended for that homeowner's policy. As it says in point 3, it's designed primarily for the personal non-business related exposure of an individual and a family. There's very limited coverage for business exposure, such as farming, for liability. And there's endorsements that can extend that to a degree, but it's a pretty small degree, right? Typically what I would see is endorsement called what's it called, Jamie? The farming, I'm drawing a blank. Uh,
Yeah, I'm drawing a blank on it too. I'm sorry.
anyway, it's a $60 a year endorsement for if you have more than 2 or 3 horses on the premises
Right.
or something of that nature. But the key point here is in that policy, in that homeowner's policy, there's a strict exclusion for liability arising out of business use of the property or business operations. That includes farming, right? This becomes especially pointed to us because more than any other business, farming operations often happen at or around our homes, right? So it's if you were to go out and buy a commercial building and say, I'm going to start a store, you would obviously get different insurance for that. But if your farming operations happen at your home and they become a business, it's very likely that you are relying, unfortunately, on that homeowner's business or homeowner's policy to give you the coverage. And in many cases, it's just not there. So be aware that, whereas the homeowner's policy is where a lot of folks start out, there's a point where it can't do what you want it to do. And it's important to know where that point is.
I'll move along.
So in light of what I just said, what do we do? Well, there's, as is almost always the case, there's a different kind of policy you should have. So now we're talking about a business. We're talking about something that maybe provides a revenue stream, something that involves types of property or liability exposures that the homeowners doesn't cover, but the farm owner's policy does have the capacity to provide protection for it and coverage for. Again, it's a bundled policy. Unlike almost any other policy you'll see, it's, as I said to Jamie, it's the confluence of business and home, right? You have part of it is literally your personal liability, just like the homeowners, your personal property, just like the homeowners, your house, just like the homeowners, all those things combined on the same policy with business coverage. I mean, we're talking about farming, but what we're really talking about is business property, business liability, so on and so forth. So that this farm policy, which is also pretty amazing in my opinion, can by schedule add all those things, property liability, whatever it is, that the homeowners is not going to do for you. We've included, some of the obvious ones: farm structures, barns, sheds, silos, and things that will be almost certainly excluded on the homeowner's policy. Excuse me. Liability wise, it can be endorsed to handle some of the business exposures, dairy operations, road stands, sudden accidental pollution. I was interested. I was looking at some of the chats here. Let me see if I can bring that up. So we're selling eggs, raising cattle, maybe do some pick your own, garlic seed, education, agritourism. That's something that's been coming on strong for the past number of years. Horseback riding. So all of these things are their business exposures, and they're not going to be covered for liability on that homeowners. And the other exclusion is the outright exclusion for property used in business. So the farm owner's policy can be endorsed or coupled with commercial general liability to cover things that are outside of the realm of what we would consider traditional farming, the dairy, the beef, and so forth. The person that's providing horseback riding lesson, the person that's providing agritainment, agritourism, those sorts of things. There are liability endorsements that will specifically address those things. Just got to make sure you get them on there. And again, similarly, this liability endorsement is specifically designed for the business things that the business exposures that might arise. But an example that a lot of people don't think about, when we talk about farm liability or business liability in general, you think, well, somebody came to my house and fell down, my dog bit them, so some things like that. A lot of what I saw in the chat though can represent or present a product liability exposure. You're selling eggs, you're selling garlics, seeds, and any of those sorts of things that are consumables, or even value-added products that may cause damage down the road. You're making crafts or things. That's all product liability. Jamie, I'll let you discuss the sort of the two or three components of what a liability policy will do for you.
Right. So, down to the point that's beyond there, it's important to think about liability insurance. This is really most liability insurances, unless you start getting into extraneously into professional or areas of that. But for most liability policy, you have to think of it as almost two pots of money, as I noted there. So the limit that you see in your insurance is that can only be invaded or gotten to, so to speak, if you're proved negligent. If somebody sues you and it is found that you did something that caused harm to somebody else, financially. So that's the limit of liability. The first part of the policy is it's really two parts. It's going to defend you. Outside of that limit is technically unlimited defense that the insurance company will provide, or the insurer will provide to defend you in that lawsuit. So you don't have to worry about that. I only have this one limit, and that's going to have to respond to both things. Typically, that is not the standard situation. So that's important. So the other issue, as I mentioned earlier, was this idea of contractual liability. So you'll see that in terms and contracts, and people say they want to see you have contractual liability. And that's a little bit of a misnomer in the policy. There is no limit for contractual liability in a policy. What it means is the policy is, as language says, it will respond if you contractually obligate yourself by a contract for somebody else's liability, or for liability you've assumed in the contract. Now, you should know that most insurance will not respond to anything it would normally respond to. It's not like you're expanding the coverage of the policy as it happens. It just means I've signed off. I'm subcontracting to Rich. Rich and I have signed a contract to each other, and I'm going to provide certain services to Rich as part of that contract. And I've agreed to contractually, I've signed what's in there known as an indemnification agreement. So an indemnification agreement usually is coupled with a hold harmless. So I'm going to hold him harmless for my actions and the actions of my entity. And not only that, if I do something that causes harm, and I assume that harm, I'm going to indemnify, meaning I'm going to pay for that defense of him and if he gets dragged into a lawsuit because of that, because of my actions. So that's the contractual liability we talk about. And that's not borne out in any personal liability that you have, typically for business related exposure. It's only usually under the commercial general liability policy, and only if it says it specifically in there that it doesn't exclude that. So that's one of the things you want to make sure. It's very important. So as your business grows and you start entering into agreements to sell your product somewhere, you're going to see this contractual liability that's going to become important, that you make sure you can respond to it and properly provide insurance on it. And that's a critical component of that coverage.
And it's sort of hand in glove with that, going back to the cost of defense, which Jamie will tell you, and he kind of did, is perhaps the more important part of your coverage, right? I mean, anyone in this, particularly in the state of New York, but anyone in general can sue you for anything, and you don't have to have done anything wrong, but it costs you some exorbitant amount of money to prove your innocence or your lack of negligence. So it's really important to have that essentially unlimited pot of money to defend you. But where I'm going with this, and it sort of dovetails with what Jamie was saying, in order for you to enjoy that cost of defense, that defense coverage, the incident, the liability the negligence, I'll say, that you've been accused of has to be addressed on your policy. I'm not really saying it the way I would like to, but in other words, I'll use the person that's offering horseback riding lessons. You could have $1 million limit, you could have a $5 million umbrella, everything else. You've got cost of defense and everything's great. But if something happens, if someone sues you, someone attempts to, hit you financially for an occurrence that comes as a result of your horse riding instruction, and you're not covered, if you don't have the riding academy endorsement on your policy, should you lose, not only you're not going to have the coverage for the award, the settlement, the insurance company by contract cannot defend an exposure for which there is no coverage, right? So that's yet another way to make sure that policy addresses all of your exposures, not just so that there's money there to pay the piper, so to speak, if you're found to be negligent, but so that that defense can be in place to prove that you weren't.
And just getting back to the contractual really quick, that was the note that I mentioned earlier, where you will enter these contracts, and this is they want to know that you have it, that you have this insurance. You will need to provide proof of it, and then also they're going to want a certain limit. A lot of times there's a limit that's going to be required. So when you're discussing limit of insurance, you want to make sure you're encapsulating what you think you're going to need and what should be there to protect you. That's a strong conversation to have with your insurance agent or broker, and part of that relationship that Rich was talking about, and determining, he mentioned an umbrella. Maybe you don't need an umbrella right now, but you may need an umbrella later. Those conversations are important.
And I'm guessing many of you folks have done business at farmers markets and various, other arenas to market your product. They'll probably ask you for a certificate of insurance. They'll many times ask you for certain language on that certificate. That comes down to just what you've already experienced and what Jamie's talking about. That's how that contractual liability unfolds.
Right.
So again, we'll retread this one. The traditional homeowners policy has very limited coverage for business exposures, including farming, for property. And again, as I mentioned earlier in my remarks, it will specifically exclude damage to property, whether it be a building or equipment, anything that is being held or being utilized for business purposes. That could be your garage, right? If you're doing your mushroom business out in your garage, that's where you process, that's where you pack. That's a business exposure. There's that carrier has every right, and I've never seen a homeowner's policy that didn't exclude that. That homeowner's carrier would have every ability to deny a claim, not just for liability, but for property damage, be it fire, wind, anything else. Not because your business caused it, but because it was being used for business purposes. The policy is not designed or priced for that. So typically what we have on a homeowner's is, as is pointed out here, coverage for anything other than the dwelling is called appurtenant structures. And in most homeowners policy, that's any or all. It's a sort of a standard amount. It's a percentage of the dwelling coverage amount. It's any or all outside structures, and it may look good, may look fine, but again, if it's not enough coverage if it doesn't apply to your building or your equipment because it's being used in your business, which in our discussion is farming. Again, if you're doing that, you either need to insure that stuff specifically, or more appropriately, I think more effectively, get a farm owner's policy, schedule the buildings, schedule the equipment, schedule all those things so that there's no loss of coverage, there's no gap in coverage. And this next point, it basically just addresses that. There are much broader options for covering buildings and structures related to farming. I've talked about equipment a little bit. Again, on the homeowner's policy, that's designed to cover your lawnmower, right? A few things like that. If you've got harvesting equipment, you've got tractor, you've got even, the person that's handling beef. If all you have is the cows and stuff, but you've spent $5,000 or $10,000 on holding equipment, chutes and things like that, that's not going to be covered under your homeowner's policy. That stuff needs to be scheduled or at least addressed so that it can be under a blanket part of your policy on a farm ownership. So I'm sure everyone on this call is aware, property insurance exposures, farm operations include lots of different property exposures, barns burn down, equipment catches fire, farm machinery can, experience collisions and overturns and all sorts of things. Field choppers can pick up rocks and destroy the knives and all sorts of things. So what the farm policy does, again, you have to know what yours says, but it gives you an opportunity, an option to address the exposures that you have, or going back to our risk management discussion, the ones that you are not willing to absorb yourself. And that's by the way, a perfectly viable, perfectly okay decision to make, where you say, I'm not going to cover everything under insurance policy. I will absorb that loss if there is one. But the farm policy allows you to make that decision, transfer that risk to the insurance company. You can maintain some of it. You can retain some of it through the use of deductibles or scheduling your equipment instead of blanketing, and various things like that. Coverage for livestock, that's an obvious one. But a couple things I would point out, there are a number of different coverage formats for livestock. You can cover it as farm personal property, and that's okay. But in so doing, it only enjoys the same coverage as the buildings. So in other words, and I won't say them all, so don't hold me to this, but it's fire, it's wind, it's theft, it's collision with a vehicle, things of this nature. There's another coverage that is specific to livestock, cleverly called specific livestock coverage, that includes other exposures that are certain livestock are more prone to than others. Suffocation, strangulation, poisoning, attack by wild dogs and animals. I forget what I think there are 9 of them, but you get the idea. Things that don't happen to buildings, they only happen to cows and pigs and stuff like that. That's livestock coverage. And the final thing I would say about that is, even within that, be sure your livestock are enjoying that level of coverage. A couple examples: poultry. They are generally covered as livestock, but not for certain perils, not for suffocation, right? Not for, that's the main one, but there's a couple other things that poultry wouldn't be covered by covered for just because they're poultry. Sheep are another one. Whereas most livestock have coverage for attack by wild dogs and animals, sheep are generally excluded from that coverage unless you endorse that back. It's just because they're so susceptible to it. Coverage for unharvested and harvested crops. Generally, what we're going to see on the farm policy is the harvested crops. It's the hay in the barn, it's the grain in the bin, it's things of this nature. Typically, unharvested would be covered under a separate kind of a policy, crop insurance. That said, in a greenhouse operation, unharvested crops oftentimes fall under a farm product, right? So it's a little bit different. Again, not to be confusing to people, but you have to have this thing structured for your specific operation. And then, replacement cost versus actual cash value. That could be a long discussion. But in its basic form, again, it's a decision you make on how you want to address the risk. generally we talk about that with buildings and personal property, of loss to, let's say your barn. But I'll just use that as an example. If it's going to cost you $100,000 to replace that barn, if it's destroyed, you can either insure it for $100,000, or you can insure it for some lesser amount and pay less premium, but enjoy less of a, I'll use Jamie's term, making whole situation. In other words, if you insure it for 60, the insurance will gladly pay the 60, but you've accepted the risk for the $40,000 difference. Again, the replacement cost actual cash value discussion is one best had in the subject to the specifics of your structure or your operation, but it's one that people I don't think have often enough. And the last thing we're talking about here, again, it's risk management, risk transference, is the use of deductibles. Going back to our replacement cost, does it make more sense for you to insure your barn for $100,000 replacement cost, but have a $5,000 deductible, so the most you're out is $5,000? Or is it better for you to insure it for $60,000 actual cash value with a $500 deductible? It's up to you, but you got to know what the difference is there, both in terms of the cost, premium wise, I mean, and the cost if there is in fact damage. One's 5,000, the other one's 40,500.
Right, Rich? And Rich kind of touched on this with the equipment, but go ahead.
Yeah, so we talked about on the homeowner's policy, it's you can probably recite it better than I, Jamie, but it specifically states on the homeowner's policy the types of things that are covered. And I think it's something on to the effect of motorized conveyance designed and intended for the maintenance of this property, the location, something of that nature. In other words, it's your lawnmower. Okay, that's what's covered. That's all. Whereas most of us, or many of us, that as we get into farming operations, we have things that are not lawnmowers, right? We have, as was noted earlier, tractors. We have forage harvesting equipment. We have all kinds of things like that. Even things that, well, here we go, mobile equipment, tractors, harvesters, spreaders, seed, fencing, tools, all things that should be, well, I keep saying that. I'm not gonna say they should be scheduled, but you should know that that's the only way to get them covered for insurance. And again, it's not a wrong decision to say, I'm simply going to absorb that loss if I have it. You just need to know that that exposure is then yours, not the insurance company's. Okay. It mentions here, and this is important, scheduled or blanket. I'll very briefly go into that. And the best way to describe it is with a machinery list. Let's say you've got 10 pieces of equipment, total value is $150,000. You've got two options. One, you can insure the whole schedule, or I'm sorry, the whole list of equipment under a blanket. You buy $150,000 worth of coverage, and essentially anything you is damaged or lost, you are covered for within the scope and the language of the policy. So it's a much broader coverage. Or you can schedule your same 150,000, and you said, I'm not going to schedule the disc and the plow. There's nothing ever going to happen to that. I'm going to schedule my tractors because they can burn and be stolen, my forage harvester, and my field chopper. I'm going to insure those 3 or 4 items, specific amount for specific pieces of equipment. Again, no wrong answer, but that's how those two options more or less work. Another thing that many people I don't think about enough is the farm products, the things that you are actually producing, the grain, the hay, the vegetables, the things, and often we think of a large operation, a dairy operation, or something like that. But even on a smaller scale, these farm products are the things you've made in order to incur revenue to your farm operation. So can you, or are you willing to absorb the loss if they are destroyed or lost in some way? Or is it better for you to transfer the risk to an insurance company? You just got to know that that's what you're doing.
I just wanted to let you all know it's 6:50. We can of course go beyond 7, but I just wanted to let you all know.
Quite frankly, Taylor, if time is an issue, we don't really have to talk much at all about auto. Would you agree with that, Jamie?
Yeah, I don't think so. Just a quick note there, it's on the slide. You just want to be careful when you're with your vehicles, whether it should be on a personal auto or commercial auto policy, not make sure, again, having your conversation with your agent or your rep on that to make sure we have the right coverage and the right limits, that sort of situation.
Yep. So let's go past that.
Yeah.
Workers' compensation is a statutory coverage in the state of New York, meaning that if you have farm employees, you must have workers' compensation. It covers injury or illness to an employee. You would be surprised. I think many people would be surprised at what constitutes an employee under the statutes incurred by the workers' comp folks here in the state of New York. But again, maybe a conversation for a different day. If you pay people to do things, you probably need workers' compensation. Your liability coverage is not going to work for that.
Right.
And another thing, Taylor, I think I'll speak for Jamie. I don't know. I think you said this is an hour-long thing. I'm more than willing to stay on later if people have specific questions that they want to discuss. So
Same
Yeah, I always allocate for extra time. I just
okay,
wanted to
good. All right,
Okay.
fine.
These were just a couple of other optional related coverages that could be coming into consideration for your operation. Flood insurance, depending on where you are, for the farm residents and buildings. Obviously, a lot of that's controlled by the National Flood Insurance Program, but there are some private insurers now out there, and that's a growing market. But you have to make that determination. The pollution and environmental.
Just one brief thing.
Sure.
I'm sorry, Jamie, on the flood insurance. More importantly, not where it comes from or what it does, is to know that unless you have a flood policy, you don't have flood coverage. It's pointedly and specifically excluded on almost every property policy that exists.
Right. That's important to know. The pollution environmental, that's going to, there is coverage available on the farm owners policy, endorsed for sudden and accidental pollution. You want to make sure that's on there. And it provides for cleanup, and people don't think about pollution a lot of things. They always think about a ruptured gas tank or a fuel tank, but I think to realize, spilled milk, you can cry over it, but it's also a mess you have to clean up.
100%. Obviously,
100%.
Manure, right?
Yeah, manure, everything, and anything contaminating.
Fuels, right? That you got a diesel fuel tank, and you hit it with the plow when you're driving, that sort of thing.
Right. And then just another one, cyber liability. If you're doing anything, social media, web, any type of transactional activity on a website for selling your product, that sort of situation, this is a growing area of coverage. It protects the liability of the organization and helps restore you too if you have, you're hacked or something happens. So it's important. Identity theft could be included in that.
And keep in mind, for a business, if you incur a cyber liability, in other words, if your operations cause personal information of other people to be sent out into the atmosphere, you're required to respond to that. It's something you have to do. So
absolutely. And not just in New York State, it's everywhere. And if you're down in Sullivan County, a lot of you, that means you definitely easily could go and have customers in Pennsylvania or be selling or transacting in Connecticut. You now have to follow those state laws too, as far as what's required. That's why you want the policy, because they know how to handle it.
I'll just do a 30-second scare tactic here. During the COVID, when all my people went home, I actually experienced it wasn't a hack, it was a I don't know what you'd call it. It was a fraudulent incursion into my database It ended up affecting about 200 of my clients potentially. Like no one ever experienced any loss, nothing like that. In the analysis of what could potentially have happened, there was only going to be 200 people involved. Nobody lost anything, everything else. In order to address that event, my cyber liability policy, it spent about $30,000. So this is expensive to respond to.
Right, and the policies provide expertise to respond to it too, that you don't, like immediate
And I
access
don't certainly have, right?
that most of us don't have and wouldn't be able to put together, and wouldn't even know where to start. So,
So it's just, again, just a thing.
so that was in summary, farming, as you see, it poses very unique risks for all aspects of insurance. The policies are not created equal when it comes to coverage of farm operations, so it's important to make sure you dial that coverage in with your agent, your broker. And also careful review of unique risks for your farming operation on a continuing basis is very important to make sure that your insurance program is staying current. So at that point, we'll open ourselves up to question. I'll just put Rich and my information up there. These are individual emails that you could, if you have a question afterwards too, that you want to reach out to, we'd be happy to help out. But
All I would say, and you're more than welcome to do that. Just identify yourself as someone that was on this call, so we have
Right.
the basis of where your inquiry is coming from. That's all. Just clarity.